G'day Internet, Max Wright here, and we are coming up to the end of summer, school holiday summer. Kids are going back to school, people getting back to work. Typically we see some major shake-up in the markets when this kind of happens. It's usually a trigger point for me. At the end of summer, something a time to look about. It's the time to look for big moves. And I think I've got a fair idea of what some of these big moves are going to be. I'm going to share them with you right here in this video. So let's get into it. Price of Bitcoin here is 24,200-ish, and we have been in the last several, over a month now, we've been riding this up channel. And I'm going to go ahead and call it another bear flag. I painted this one for you early on, and I told you guys I think this is a bear flag. We came down into this, we started going sideways with a slight uptrend, and I said, guys, I think this is a bear trend. We had bear flag. We have another big leg down. That was proven to be correct. Now, this is is an interesting one. My only concern here is when I said that, there was not too many people agreeing with me. People thought we were going to come up, bounce off, and be happy times. The sentiment today is a lot more negative, and I'm a lot less of a contrarian today when I say we have there's more downside to go. That makes me a little bit nervous. I much prefer being a contrarian. But there's a few more people saying, no, this is actually another bear flag, and there will be another downside. Now, something nice and convenient for us right now is we are towards the top of this channel. I'm not sure if I'm going to touch this line again, but we are near the top, and in my opinion, it's an excellent time for making money on the way down strategies, shorting, puts, etc. And so I'm just keeping my eye on this channel, looking for a good entry point. You can see I've got one of my alarms set here for 24,300. I have a few targets around just under 25,000, and so I want to be made aware of my phone to let me know when Bitcoin goes over 24,300. It might rocket up, for another $500 pretty quickly. I'll be able to enter a short, buy some puts there, do some things, make some moves. So let me just kind of go through some of the logic here, and then I'll talk about big picture, about why I'm so negative, why I think things are going to happen the way I think. And I just want to talk about summer. So, what the hell's summer? What's summer got to do with it? Just markets tend to get sleepy during summer. Volatility goes down, and you can see this is last summer, right? We traded in this sideways channel, and then right here, August 7th, boom, we break the channel and we go on into Christmas or into the end of the year with a big volatile move up and then down, etc. Summers are just usually a little more volatile. A little less volatile. When you come out of summer, there's a little something. So here I am recording this August 8th, and we're coming out of summer. Now, it doesn't have to necessarily happen to the day, to the week. Sometimes it even happens a month later. But there's usually a volatile move afterwards. And so my only question that I ask myself is, are we going to break out of this channel to the upside? Or are we going to break out of it to the downside? Now, my money is firmly on the downside, sadly, for all of us, or it would be nice if everything went up all the time, but that's not the case. I do believe we are going to go even lower. This red line right here is just a note from me. It's actually the 300-week moving average, and that puts the price down at 17,000. I think we're going to hit at least that. At least that. I think probably further, though. And so I guess now let's transition into why. Like, why are you so negative, Max? Like, it's already gone down so much. How much further can it go? Well, it can go down a lot. It can go down a lot further. But why am I so negative? We just have just a recipe for disaster everywhere. For starters, okay, we had since 2008 to 2022, that's 14 years. It's the largest bull market in the history of the economy. In the history of the United States, that's the longest lasting bull market ever. Even if you take it back and you count March 2020, the end of it, with the COVID fall and very quick rise, even though it was so quick I'm not even sure you'd count it. Even if you go back then, I still think that was the largest expansion without a genuine recession there. So the bigger that expansion is, usually the bigger the crash. So that's really important to know. We should understand those cycles, know that we had a very elongated expansion, the longest in the history of the Republic, and so we should expect some pretty severe downside. We need to know that going into it. But now let's zoom in a little bit more, and let's say, what's going on around the world? Okay, we know about Russia and Ukraine. We know about the energy crisis in Europe, cost of energy is going through the roof. That hurts manufacturing. There's three big ways that demand is destroyed. Right? Money is taken out of people's hands, and so 3 or 4 big ways. Let's go through them. Interest rates. It's a big one. Interest rates go up. all of a sudden your repayments go up, you have a lot less money. Inflation, when that goes up, all of a sudden your cost of just your living allowances, your energy, your rent, your food, it goes up so much you have a lot less discretionary spending. All of a sudden you've got to pull your head in. That destroys demand. Taxes is a big one, although they don't usually make such volatile moves. Usually it's in terms of the ones that move: inflation, and your energy costs, and interest rates. There are your big ones, right? And all of those are in a horrible, horrible, horrible situation right now, which means just demand is being destroyed very, very effectively. You're just the average Joe and Jane, they're spending so much time and energy just getting by. They can't be starting new businesses and creating. They can't be spending on new products and expanding the economy. They just can't be doing it. And so, I'm expecting it to get worse. So that's a concept. Demand destruction in full flight and moving very, very well. Okay, let's jump over to the next topic. The amount of potential black swans out there is just crazy. It's crazy. Okay, you've got your war in Ukraine. You got your energy crisis in Europe. You have the Taiwan situation possibly coming to a head. You have banking crises all over the world. You have hyperinflation in 4 or 5 countries. You have the low end of the spectrum, the Sri Lankas, the Argentinas, the Turkeys, the Zimbabwe's, all in absolute crisis, massive, massive inflation. You have the entire developing world. You've got the dollar wrecking ball wreaking havoc. That dollar is getting stronger and stronger and stronger. And we just popped above resistance, by the way. We dipped below an important 106 point of support. We reclaimed that, and so I expect that to start heading up again soon. So you have all these crises, which is any one of them can just like be the trigger to start something. And I remind you guys, I've told this story many, many times before. In 2008, what started it all was the Iceland stock market. It's like, Iceland, does Iceland even have a stock market? What do they got to do with anything? And it went down. Turns out there was a bunch of British banks who were invested in the Icelandic stock market. 3 months later, 6 months later, their next, semi-annual report, quarterly report, they all of a sudden had to print those losses. It turns out there were other banks and institutions who were invested in those British banks who were now, and so these ones had decided to print all these things. And just quarter by quarter, semi-annual by semi-annual, all of a sudden the news is just getting worse and worse and worse and worse, turns into the 2008 global financial crisis, which almost leads to, we were within days of a complete credit market freezing. If that happens, the entire economy just shuts down. You just see everything just go big time, right? They rescued it at the 11th hour with what was at the time the biggest money printing that we had ever seen. We'd never seen anything like it. Helicopter money everywhere. Now, we have seen it again. Now, but that kind of set the standard. Now it's like, okay, well, we know what they're going to do. They're going to print. Fast forward to Corona. Everyone knew what they were going to do. Things crash. They're going to print trillions. Markets popped up really, really quickly. Okay, everything's supported. They printed. This time we have inflation. Causes a little bit of doubt. They're going to try and talk tough. They're going to try and get inflation under control. But ultimately, before those credit markets freeze, they are going to print more. I'm completely sure of it. They will print more. They cannot let those credit markets freeze. How close are we to that? Now that's the million-dollar question, right? But I deliberately left something off my list where I was going through all the different potential black swans in the world. The Chinese real estate market is currently a complete mess. A total mess. And I warned you about this 6 months ago. I used the Icelandic example, and I talked about how it takes months and months, quarters and quarters, years for the contagion to be understood. 6 months ago now, or even a little bit more, Evergrande failed. Evergrande started defaulting on its debt. It's the largest real estate company in China. And I said, guys, this may take months, quarters, or years to play out, but this could be the beginning of a contagious thing that brings down the entire global economy. So I want to go back and give you a little bit of an update about what's going on in China since. We have massive bank failures in China, right? There are hordes of people, especially up in the north of China, who have lost their bank accounts. The government's just come in and froze it. The banks went belly up and they have frozen their bank accounts, right? These people are just like lost their life savings. They're standing on the streets protesting as they always do and saying, give us our money back, give us our money back. There's no money to be given back. It's gone. All right. If the CCP wants to bail them out and give it to it, so be it. But that money is gone. Those banks went belly up. Right. I don't know all the details. Maybe they were invested in Evergrande. Maybe they weren't. Maybe it was Evergrande that didn't pay them so that they couldn't pay their depositors. I don't know exactly the contagion. I don't know the trail. I haven't investigated it to that depth. It's in China. It's not my jam. I try and keep abreast of it, but I don't focus on it. And so how it came down, I don't know, but we're starting to see bank failures, right? Now, there's another phenomenon that's happening in China. In most of the Western world, you put down a deposit when people are building, like a developer's building an apartment block, for example, they sell the properties off the plan and you put down a deposit, maybe a 10% deposit. It's like, hey, I'm going to buy this property at this price. You go ahead and build it. Then the developer goes and gets the money from the banks or some financier of some description, builds it, and then you fulfill your obligation, they hand you the property, then you go and get your mortgage, and then you pay for the remainder of the property. Okay, that's how it works in the Western world. It's different in China. In China, the people, they buy the property and start paying the mortgage when it's just they haven't even turned dirt yet. And the developer uses the mortgage payments to build the building. And then, when it's complete, they hand it over. But the person may have been paying a mortgage for 2-3 years already. So what's happening in China, it's a huge phenomenon. I believe there's at least 3 million people now who are refusing to pay their mortgage because they don't think the development company, the real estate company, is going to complete the project. They think they're just going to be paying for 2, 3, 4 years and the project never gets complete because the company goes belly up. Right? And there's plenty of wisdom in what they're thinking there, because I think exactly the same thing's going to happen. The real estate market in China is cracking and cracking big time. So you have millions of people saying, I refuse to pay my mortgage. I believe there are millions of people who have lost their deposits from bank failures. And in America, it's a little bit of a different culture. We here in America, we invest in the stock market, and it's a huge deal. And the real estate market is still a huge deal here. But in the rest of the world, generally, China, Australia, I know very, very well, the primary investment vehicle and savings vehicle for everyone is real estate. The real estate market is by far the largest sector of the economy in these countries, because your first level of savings tool is your bank account. And then your next level, as soon as you have enough money, you go and buy an investment property, put a tenant in there, start to grow your wealth that way, because the stock markets are a lot less sophisticated there than here. We don't have the Facebooks and the Twitters and the whatever else in Australia, in China, etc. So the real estate market is a much, much bigger deal in other countries. And we have China, the second largest economy in the world, showing all kinds of cracking in their real estate market. And that for sure is like, that's a massive worldwide contagion event. Like if China sneezes, Australia catches a cold. Like that's a huge one. Because Australia, virtually everything they mostly sell all their natural resources that they mine, etc. They ship it to China. China builds something with it. They ship it out all over the world, right? So when China goes down, what happens is Australia, all their exports just stop. The demand is destroyed, and all of a sudden Australia goes into some kind of depression, recession too. Also, Australia is the most beautiful and best playground of the Eastern Hemisphere. So huge, rich Chinese, rich Malaysians, rich Filipinos, they also go to Australia, etc. So, they want their kids to go to school in Australia, they buy investment property in Australia, etc., etc. That's why Australia's had like a 30-year real estate boom. So all of these things are kind of happening, right? I talk about Australia a little bit just because I'm Australian. I lived there for the first 30 years of my life, know it relatively well. But this, I wanted to just show you like an important step in the contagion, right? So you understand how this turns into a worldwide phenomenon. So I am going to argue that unless something jumps up and beats it to pricking the everything bubble, I think the Chinese real estate market is winning, is ahead of the game. It's going to be the pin that pricks the bubble. And I kind of predicted it 6 months ago when I warned you that Evergrande you're going to find out more and more and more. And the real estate market is going to hurt in ways you didn't even imagine. But we're starting to see those next cracks appear, the deeper cracks. And it's going to go, and I don't know when it comes to a head. Tomorrow, 3 months, 6 months, a year, 2 years. I don't know when it comes to a head. But I do believe that the Chinese real estate market will prick the everything bubble worldwide unless something else even worse pops up and does it for it, right? So I want you to know that that is one of the big reasons why I'm so bearish macro. I think everything, crypto, gold, silver, real estate, stock market, everything is going to get slaughtered. And so one of the safest places to be, ironically, in very high inflation rates is cash. Cash, because listen, it's better to lose 10% of your cash through inflation than 50% of your cash through owning assets that get chopped in half when we go into a worldwide depression. So all the financial assets are getting clobbered, right? You got cash up here, and then if there's, can you make money? But yes, there are some other ways to make money, but generally I think that the way you're going to do that, if you want to go down that path that's riskier, is you can do things like shorting, you can do things like buying puts, you can do things that make money when the market goes down. Now those things are inherently more risky because shorting by definition is a leverage position. If you don't know your good entry and exit points, you get stopped out, you lose everything. It's a risky endeavor. But for those who know what they're doing, shorting is a good way to make money, I believe, over the for the remainder of the year and probably into next year, but I'll keep you guys updated. But I'm just telling you now, I don't believe now is the time to be longing any assets. It is not a good time to be longing assets. I think it's a very, very scary time worldwide, and I think it's going to be much, much, much worse coming up over the rest of this year, into next year, and then. Now here's the good thing. I mean, I want to talk about the positive note. It's never fun to think about that level of pain and misery and suffering that everyone's going to be going through. But something important that you can do is make sure you are not one of them, all right? Make sure you're not one of them. All that needs to happen in this environment is if you can just protect your capital, you don't need to make so. If you can just protect your capital, you will be around to scoop up everything for pennies on the dollar, right? That is where the real money is made. When you can buy crypto, gold, silver, real estate, stocks, when you can buy those things for pennies on the dollar, that is when the massive wealth is created. So all you have to do is just preserve your capital. That's number one. If you can do that and have a good psychology, and you can run in when there's just blood on the streets, and there's already blood on the streets, but it's about to get bloodier. As it gets worse, you can come in and scoop up the bargains. Now this achieves two things. One, it makes you fabulously wealthy. But two, a lot of people have this backwards idea, and I want to destroy this. They're like, oh, you're taking advantage of people's suffering and you're buying up their assets for pennies on the dollar. Yeah, and if you weren't there, then the value of the real estate and their assets would go down even more. You are actually supporting the price. By you making yourself rich, you are actually supporting their price so their assets don't go down even further. Without you there bidding up the price to that point, it gets even lower. So I think you have a moral obligation to the world, and just a common sense personal one to yourself and your family, is to get rich during this time by being that support. You buy up everything when no one else is there to buy, and you actually help the economy when you do that. You make yourself fabulously wealthy at the time. So guys, if you like this kind of content, do me a favor, hit the like button, hit the subscribe button, and let me know in the comments below. Do you think there's way further to go in this everything bubble? Or is this the bottom and I'm talking smack and we are going to head up up and to the right on the charts, right? And let me know what you think about China. Have you been following it? Is it as bad as I say? Let me know in the comments below if you think it's even worse. Okay guys, take care, and I will see you soon.